Hey everyone, welcome back to Corporate Decoder. Today, KKR FS Income Trust just filed an 8K report, and I am spotting a key update on their fundraising efforts. Quick note, this is not financial advice, just my take on public filings for educational purposes. They've been raising a lot of money through private offerings. And this filing gives us a snapshot of just how much. So this is a pretty standard current report called an 8K. Companies file these to announce major events that shareholders should know about right away. Think of it like a bulletin board for big news. The company we are looking at is KKR FS Income Trust. They are essentially a real estate investment trust, meaning they invest in income producing real estate. These trusts often raise money from investors to buy properties and then distribute the income generated to shareholders. The main point of this filing is about the sales of their shares that did not go through the usual public registration process. This is pretty common for investment trusts like this one, where they can sell shares directly to certain types of investors. What happened is that on the 3rd of August of 2026, they sold a little over 353,000 shares of their Class I stock. The total money they got from selling these shares was about $10.3 million. Now, it is interesting that the exact number of shares was going to be finalized later on the 21st of August. This is often done when the price is determined based on the value of the assets at a specific point in time, like the net asset value we'll see later. They did this as part of what they call a continuous private offering. This means they are allowed to keep selling shares over time without having to go through the whole big registration process with the SEC every single time. They are relying on exemptions from the law that says companies usually have to register their stock sales with the government. A key part of this exemption is that the buyers must be what is called accredited investors. Basically, these are individuals or entities that meet certain income or net worth requirements, meaning they are considered sophisticated enough to understand the risks of investing in unregistered securities. The company takes their word for it through signed agreements. Moving on, there is another important section here covering other events. This is where they can report anything else significant that doesn't fit into other specific categories. And what we find here is information about their net asset value or NAV. This is a crucial number for any investment trust. As of the end of July 2026, the net asset value for each Class I share was $29.08. This is the calculated value of the company's underlying assets minus its liabilities, divided by the number of shares outstanding. It is essentially what each share is theoretically worth based on the company's holdings. And on that same date, the total net asset value of the entire company was around $1.65 billion. That is a pretty substantial amount of assets they are managing. Then we get to the status of their overall offering. They are in the middle of this private offering, and they plan to raise up to a massive $5 billion worth of shares. This tells us they are actively seeking a lot of capital, and as of the date of this report, they've already sold over 60 million Class I shares, bringing in about $1.765 billion. That is a significant chunk of their $5 billion goal already raised. This means a lot of investors are putting their money into this trust. It is worth noting that these numbers don't even include any shares that might have been bought through their dividend reinvestment plan, which would add even more to their invested capital. They plan to keep selling shares every month. This continuous selling is how they fund their ongoing investments and operations. Finally, we have the section for exhibits. This just points to an interactive data file for the cover page. Essentially, it is a machine-readable version of the report's front page, which is pretty standard for modern filings. Looking at this filing, the story is clear. KKR FS Income Trust is actively raising a significant amount of money through private placements. They've already brought in over $1.7 billion and are aiming for a total of $5 billion. The net asset value per share at $29.08 as of late July provides a clear valuation for their Class I shares. This continuous offering strategy is how they fuel their real estate investments. What I find interesting here is the sheer scale of the capital they are raising. $5 billion is a lot of money, and the fact that they've already secured nearly $2 billion indicates strong investor confidence, or at least strong sales efforts. For investors, understanding the net asset value is key to seeing if the shares are trading at a premium or discount to their underlying worth. Though in a private offering, that is less of a public market concern initially. The risk here is always with private placements. While they are designed for sophisticated investors, the lack of public market transparency can sometimes hide underlying issues until they become more significant. The company is relying on investors being accredited, and that is a regulatory safeguard. My biggest concern is always the pace of deployment for such a large capital raise. Are they finding enough quality assets to invest this money into attractive valuations? Or could they end up overpaying or holding onto cash for too long, which erodes returns? The fact they are selling shares monthly suggests they are actively deploying capital. which is a good sign. Alright, that is my take. Stay decoded. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. Like, comment, subscribe, and join the Discord in the description.